Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we will be going through the market update. Um, Not much as far as earnings so far. There's a couple trades that popped, but unconfirmed so far. And then we'll go through Joe's analysis. So just a side note, just looking at calendar. So next week. The Wednesday meeting is basically right near the 4th, so we're not going to do a meeting next week, but we'll resume on the 10th. 10th will be Joe alone. I will be out traveling. And then, from there, just kind of regular schedule. And we are trying to get Ashok onto a call later next month, and we'll see how that goes. So, all right. May mute. Okay. So let's get started here. So, um, big picture market overview. SPX, NDX still in one, Russell still in two. Um, Dow, you can see here since last week went back into one, but hasn't moved much. As far as, sorry, there's still people joining here. As far as the sectors, we look down here, current days. So XLF went into one a couple days ago. Utilities down here went into two prior to the last week's after last week's meeting, and everything else pretty much same since last week. So still looking mostly bullish there. Big picture pie. So pretty much flat, right? So we went from 37 last week to 37 this week. So no real movement there. So let's dive into market pulse. So, so from last week, we're right about here. So that we had just crossed over with the eights getting a higher percentage than the ones. So just kind of meandering along. Same as the stock price, up, down, pretty much flat since last week's meeting. What we kind of look for here. So we had, a bunch of twos pull through, and that's, since this time here, basically May 21st, the ones topped out. It's been pretty much straight down. So they're starting to level out here as far as the twos. So what we look for are the twos moving into four. And you can see pretty much no so far. That just, and when they start moving from one to two, that's your typical kind of pullback, like here. Let me pull out the fours. You get ones dropping twos, that's your typical pullback. And then, you look at the fours. Is there any follow through, or the twos going to four? And you can see pretty much nothing here, and then things turned around. So, we're just keeping our eye on this. We've had a big move for twos, but not much going on with four. So that's kind of indicating that, even though the S&P's gone up, other indices have not, especially like Russell. um, S&P's been propped up with runs by like Apple, Nvidia, and those big ones have really pulled it higher. Whereas the rest of the stocks aren't so much doing that. So we're just looking here. Okay, these things are flatlining, and we're waiting for a break one way or the other, but it's not. We're not getting any indication for state four wise that it's going to be any kind of big movement down so far. We'll keep our eye on it. Um, yeah, and the eights have been coming up, and if we start to see a turnaround, we'll see those eights pop into seven. And then, likewise, the twos will start going back into ones. So just kind of watch those daily numbers. And those are all listed here. Basically out of 4,069, how many have transitioned into different states here. So you can do that. And down at the bottom, we have the transitions. So you can pull up, all the different transitions for that day. So I just keep an eye on that. As far as our kind of one of our good indicators, new highs, new lows. Obviously you see the green here, all bullish. Get kind of spike in reds and then it went away. So we're just chopping right now. We got nothing really high, that we look for like a good bullish signal. 400 is a really good one. So a little over 200 there, but really trying to figure out, where it's going. As far as overall market, not as much S&P. Like I said, it's being pushed up by a few big names. Nothing really changed from, here. This is the number of symbols over their 50-day average and below 50-day. So not much change there. And, 200s are pretty far off. So, all right. I think that was it for that. Bullish, bearish. Let's take a quick look at that one. So these are the combination of all the states. So this is green pie. The first chart's showing these individually. Next chart's showing collective, all bullish. So 1, 3, 5, 7, and then bearish 2, 4, 6, 8. So since last week, pretty much flat. We're not. So we do look for something below 30 for oversold. So we're a little bit above that. So we're kind of in no man's land right now, but kind of edging towards that 30% oversold, which historically has done pretty well. I mean, it's not 100%, but it'll give you a good indication. And we also look for highs and lows. So that's it for the pulse. I did want to show you. So in our new we added a feature here. It's under Delphian Analysis. So I pulled up SPX. So we did calculations. So this is monthly stock price move. So this is like basically the raw data, going back, all the way to '07. So this is basically, first of the month to, close at end of the month, close the return. So you can go by month on this chart. And then we put in the average over here. So, going back to '07, every January, the average return has been 0.04. So you can see which months have typically been good. We always say September's like typically the worst month. But you can see here, so you can pull this up for all, let's say 4,069 symbols. You can look at their monthly returns on average. So pretty cool. Just added in there. I want to show you guys that. So let's get into the charts. So last week, we were right at T3 and we're still right at T3. So we talked about this a lot. I'll just go through it quickly. Our typical kind of pattern is get up near resistance, kind of have a problem, come down, bounce off support, and then get up into the average move. From there, 20, 30% go higher, and the rest kind of pull back, into state two. So that's the typical move. So where we're at right now, we're trying to get into that 20, 30% where it runs. So the key to that is getting above target 3, 54.82. So you can see it's acting like pretty strong resistance so far. Got above, closed below. Once again, tried to run, closed below. So what we want to see as far as bullish runs, we want this to get over, kind of retest, and then this, turn this into support, and then we can get like big runs after that. So we're right on the edge. I would say the longer we're up here, like I usually say, the longer we kind of hold around this level, the better. The more likely we're gonna, have an excuse to break through it. But I will say a majority of the time, historically, we're gonna go into state two, and it's probably like 2/3 of the time we'll pull back before. I mean, we always go back two, but about 2/3 of the time we're going to pull back lower after our typical move. So we got 34 out of 43, another 10 days on average. We're a little above the current move's a little above the average, so it's good, but pretty typical move. And we'll just have to see if we can get above that target three. That's kind of the key. And I'll pull it out to um, the big chart. So big chart was pull up. So this is the current bottom of our range. Come on, there you go. This was the previous 54. So tops, 58. It's off the chart. But so we have a couple indicators we want to keep our eye on here as far as to the downside, right? So we have 5,400. That's the bottom of the current range. It'd be actually nice to get like a retest, and show support, and then you can run off of that. But that's like an ideal situation. And then we got our 20-day, which is pretty much right on that 5,400. So those are one and the same at this point. And then below that, our 50-day. Holding that 20, that whole last run, October to April, held that 20-day. I think is one day close below, but that whole time period is holding that 20, and pretty much same thing here. 20 was one day there, actually 2 days, but right on it basically. And then just kind of running. So 5,400 is critical for S&P, for support, and then resistance wise, we go back. It's top of the range 5,482. So that's the two big things with SPX. All right, so Russell, here's your monthly average. So really, this is end of the year type of. You look at this end of the year runs here 2 and 2.82. You look at S&P, it starts kind of a little earlier, but Russell strong at the end of the year. Who knew? So anyway, it's interesting. You guys can go through and pull up any symbol and check it out. We're coming into July, and maybe in the future we can build this into the screener so we can look for just best performers in June and July and things like that, before the month comes out. But we'll have to build that. So, okay, Russell, 12 days in out of average 8. Just been chopping basically right on our entry point, back and forth. So below, above, below, above, like basically right on it. So really we're in between the range of 2,100 and 2,000. This tested 2,000, tested it there, but ended up, closing above. So 100-point range for kind of Russell right now. But our bigger range is 21 to 19. So I'm not just kind of flat since last week. Let's go into the big chart. We know the big number here to the upside is our 2,100. Multiple fails at getting above 21. Other range 19. And then kind of like our mini, we talked about, past couple weeks, almost every 100 is support and resistance for Russell, but, bigger picture 19, 21, but you can also use that 2,000. So we have been holding at 2,000. You can see right in here, basically held all that. We got the 50-day. Yeah, we got to get above that. And then, try and get above 21. All these fails here. We had a day or two above, but fails. Now, this one kind of tried to run, but so This one kind of same old story, right? I would think that, rates being a little lower, this would be a little more bullish, but um, hasn't been. So the kind of numbers here, so we got 21, that 50-day is 20, let's call it 2040. So getting above that, and could see a run back at 2100. It's been very difficult to break. But we'll see. And the 2000 it's got to hold below that. Obviously, you get 200 and then 1900. So that's it for the major indices we track. Let's go into our Fed tool. 10-year, I'll pull that up kind of real quick. It's kind of been chopping. The low in this kind of time period has been right around 4.2. So we're about zero point 0.1 above that. Uh, it's just, are we going to continue downtrend or is this thing going to break? Really, it's going to be up to, um, see, you can see here previous tops were right in that 4.3 range back here in February, March. So, you know, you can see, this kind of grinding higher, with a mini downturn here. So, it's obviously been very volatile and it's going to be driven by, multiple things, but the key is going to be, like Fed expectations, but also like dollar strength and things like that. And also the liquidity in, the treasury market too is a big thing. So, all right, Fed. So, this is how many days? A little over a month out. So still no cuts for July. September, not much movement. Honestly, this maybe a shade, but still kind of expecting a cut. September, like we said, I think it would be difficult for the Fed to cut right before an election, but you never know. And then definitely the cut, by November and by end of the year, we're expecting two, and none of these really moved over the past week. So, uh, all right, so balance sheet, didn't pretty much went sideways again. So, like I was saying, if they're going to start tapering their purchases even more, that'll be, I think, more bullish for stocks overall. But, it's only been 2 weeks, and, there's been a couple of those in the past. So, if we see a third week, maybe at that point we can, uh, start to expect that they're not going to be selling as much. But still, the trend's pretty much intact, but we'll just keep an eye on it because if they're gonna go and not really sell anything, that's a lot different than tightening. So if they're basically easing is very bullish for stocks, doing nothing, just normal, kind of keeping a balance sheet at would still I think be more bullish than anything. And then when they're selling, that's usually, pretty bearish overall. So, but we'll keep our eye on that. All right, last thing is we got numbers tomorrow. I did want to pull this up, bank stress test. Sometimes that can move the market. It's 4:30. If there's some kind of, we always look for banks, any kind of underlying issues in banks. So, 4:30, just keep your eye on the news for that one. Then GDP tomorrow. We got um, PCE, quarter over quarter. Corporate profits. Look at this quarter over quarter. Previous 3.9. Consensus 1.7. I pulled this chart last week. It makes sense when we look at this, right? The EPS revisions for, we got 5 stocks with huge, positive revisions, and then the other 495 and S&P with -5. So, that kind of makes sense with that chart that we saw there. And it's just kind of PCE. I don't think these are like huge numbers, quarter over quarter type stuff, but they can have revisions. it's the data and obviously, GDP, I mean, if there's big misses or things like that, it can, but I don't think these are huge numbers. So I didn't look to the next week yet, but it's kind of where we're at. So
Hey, Josh.
yeah.
Yeah, with regards to the numbers, there are a lot of them, really between now and next Wednesday before the holiday. But what I found really interesting is next Friday, which, markets are open, but, who the heck is going to be around? That's the employment number. So that'll be interesting in thin markets, to see what comes out of that thing.
Yeah. Well, the Friday we got, month over month, we got some inflation
Oh
stuff
yeah,
here. Yeah.
there are a lot of numbers every day, right up through next Wednesday, and then Friday we get the big one. But with nobody around, it'll be interesting.
Yeah. There'll be some people around. Yeah. I'll be there.
Yeah, me too. But
Most people, I'm sure, will be taking a vacation anyway.
thin markets. Yep.
Yeah. Okay. Cool. Any open up to questions, comments on the market overall? Don't be
Yeah,
shy.
this is Dave. I want to make a comment on Joe's comment there that holidays are coming up. This is
Yeah.
typically when a lot of trading falls off during the late summer. So don't be surprised if there's not a lot of uh, volume, and you might actually see a little bit more volatility on a surprise number than you might just for that reason. It's this kind of time of year I think about looking forward to the third and fourth quarters and thinking about what's going to happen there and kind of like pre-positioning for those quarters during this quarter. That's what I do.
Yeah.
Anyway, be interested to hear what Joe says about that when he gets his turn at the bat here.
Yeah. Well, I mean, typically, S&P is up pretty good.
Yep.
That's its actual best month and then get out after July. So we know September, we've seen that over and over.
Yeah, so a question early for Joe would be, since this is an election year and election years are supposed to be not bad, but the year after being maybe even better, where is Q3 and 4, 2, 3, and 4 relation to an election year? I don't know whether Joe's looked into that, but that would be an interesting thing to think about this year. Just curiosity is killing the cat here.
Yeah, and Dave, welcome back. I don't, off the top of my head, I don't know those percentages. I will do some homework on that. And I was actually, Josh mentioned, I'll have the floor on July 10th, and I plan to spend a fair amount of time on the election there. So I'll have more for you in a couple of weeks, but don't know those numbers off the top of my head, the specific numbers.
Okay.
Okay.
Thanks.
Yeah. Thanks, Dave. Anyone else? Okay. Like earnings. So, there's been a few unconfirmed trades. Let me just close these. The earnings season really kicks off, the banks kind of kick it off now. It used to be Alcoa, but July 12th. So, right after Joe's meeting, it's going to get you guys all ready for earnings to kick off. So, this one LUV. So this one came in this morning. It's actually confirmed. I was trying to resolve. We get our earnings stuff from Zacks, but Yahoo obviously. If it's a range, it's not confirmed. But if they put in the date, then it's confirmed. So it's actually confirmed here. But the data we got from NASDAQ via Zacks through NASDAQ, it wasn't updated. So trying to do a better job of tracking these because we have like 6 to 7 of these trades that are estimated for the bullish pre-range, but this one's actually confirmed. So I would just do it, if you're interested, if you guys are tracking these trades, I would just, once these things pop up in the morning, just double check on Yahoo to see if it's confirmed. Only if it's estimated. But we had a couple the other day. Both of those are um, Delta and Hess. Those are both still estimated, and Yahoo also. So anyway, so that was it for earnings. Nothing. Just kind of kicking off. So you guys can always pull up your earnings plan and the drop down here and kind of look to the schedule ahead. So, first confirmed would be this SYF on the 28th. There's one tomorrow, unconfirmed. So we got two confirmed on the 28th, so Friday. That'd be the first one. So unless you saw LUV was confirmed, you could have traded that. So, but yeah, Q2s have typically done well. So unlike Q1s, so we'll see how it does. But that was it. That's all I had. Any questions, comments before I turn over to Joe? All right, Mr. Joe, you're up.
All right, Josh, and hi, everybody. Thanks for joining. Let me grab the screen here. These charts to go through, and yeah, those couple boxes that the monthly and annual returns, that was Josh's idea, so we're happy to add those things. Hopefully they will be beneficial for you going forward. There's that balance between too much and sometimes, we feel like the platform offers too much, but they seem like, really straightforward pieces of information. So we decided to add them to the mix. Handful of charts I definitely want to go over. And by the way, happy debate eve. Like we've been talking about for a while. Can't wait to see what the numbers are for how many people turn into tomorrow night's debate, and whether the market reacts on Friday. There are a lot of statistical numbers coming out on the markets Friday as well. But yeah, happy debate eve. Something else. There's a research group out there. I don't know that we really referenced them, but Sam Stovall is part of the group. I'm sure many of you recognize him. The name of the group is CFRA Research, and we're listening to them earlier today. And actually, I would encourage you. It was the first time I had listened to them. I've enjoyed Sam Stovall for many, many years. When I come upon his stuff, and they do free webinars from time to time, and I just think he's a great expert. And it's CFRA Research. If you have time and you want to plug into another source for different market information. But one of the points that they made today was they're looking for 9% earnings growth in the S&P 500 this year, and then 14% next year. So those numbers aren't, really much different from what we've been hearing and talking about for a while, but just heard them today and just wanted to reiterate they seem to be the ranges, as this, market continues to surprise to the upside. And as Josh pointed out, earnings season will be starting around the 12th of July. So, a couple things jump out at me. Yeah, is that Dave?
No, just before you move on from there, was that 9% for this year from here to the end of the year, or does that include what we've already got to here?
I think, I'm not going to say I'm 100% sure on that, but I believe the context was for the year. If I can get any further clarity on that, I'll confirm next time.
Okay. Thanks for the tip. I'll go look into that site that you mentioned. Thanks.
You're welcome. One of the things, and I'll pull up the chart, as we go through a bunch, but probably the thing that jumped out at me most on the home page at this point is XLF, going into state 1 2 days ago. So, we'll pull up that chart. As we've talked for a while, we're getting a little bit long in the tooth with state 1s, SPX and NDX. Not that, we know that those things have gone out, 100+ days for sure. we talked about that in the fall. So, but, just have an eye on the fact that they're coming up on average days. So, chart-wise, let's see, Josh always talks about it. I just wanted to pull up, rates. I think rates are just, at this point, sleepy. I don't think they're going to, I don't think much is going to happen for a while. I'm talking in terms of weeks. So, I don't really think that's going to be a market mover. There's the chart. Oh, let me see this. We are, in bullish 5. The thing that caught my eye a little bit, and I don't really look at these numbers too much. I don't know, Josh, do you, in terms of the next expected state, do you look at them very much?
Not really. I mean, outside of 1 and 8, yes. If it's like 2 or one of the middle ones, it'll give you. But I mean, 1 and 8, you know where they're going. But yeah, if it's like
Right.
7, 5, all that, yeah. I mean, I'll take a glance at it. I don't, like put money on it, but.
And as we've said, Josh, we're trying to get a shook in here sometime in the next month. So we'll give you advance, warning for that. We'll definitely go with some Q&A for a shook, I think, as well. So, be prepared for that. What caught my eye here is, TLT, it's in state 5, but, the highest expected state, at almost 50 is state 1 next. And that sure would be interesting for the markets. But for the time being, I think, we're going to be sleepy here, with the rates. Here we are, XLF, and XLF coming out of the October lows. The fact it's been sleepy as heck, and the high, it actually, I think the techs, topped out earlier in March, maybe March 8th, and then we rolled into the April 19th lows. So, your timing on the lows in XLF and the financials, was very similar to the overall market. We basically went higher for longer and then had just a couple week sell-off where, the techs kind of went sideways, but had more of a 6-week sideways and then downward spike into April 19th. So, and from there, it's been total sideways. And, we had a one obviously here in early May, basically did nothing, went into 2, we're back into 1. So it's sleepy, nothing happening. Whether JP Morgan's earnings on the 12th of July are a catalyst to get this group going, time will tell. But I think, we've been going sideways for a while. Can't say that we won't continue to, but, if we're in 1 and we get above 43, I would think that's going to be a hell of a signal that the market's off to the races once again. And to the downside, we have to break the April 19 lows, or April 16 in this case. So, that's one I definitely keep an eye on, in terms of signals for upside momentum. It would be this thing making new highs above 43. Speaking of JP Morgan, I thought, because that really leads the earnings charge, lo and behold, JP Morgan into state 1 just in the last 2 days. How about that? So piggybacking XLF, obviously. And, Morgan, in terms of their earnings, it generally, you get some pretty good moves, on their earnings numbers. I remember in April, and it turned out, I think Jamie Dimon back in April was talking a fair amount of gloom and doom. And it was only a week later that the market made its, meaningful bottom on April 19th. So, again, much like XLF, the high here was basically 205. Here's one to keep an eye on in terms of, forward upside momentum for the markets. I think XLF and JP Morgan making new highs would be a real catalyst for further upside. Josh, I talked about SPX and, good old state 3 here. Just, I did pull some retracement numbers. I mean, we can get, way over the top with too many darn numbers. I will, I pulled up a couple, retracements, and basically, what I think is a little interesting is, between the two different charts. I mean, you see this gap here, June 11 and 12, but maybe because we have the green there, that gap jumps out at me, a lot more in the retracement chart. But, what I'm getting at is we did have a gap on the 12th and 13th. To fill that gap is 53.75. Okay, we're about 100 points higher than that right now. If we're to roll over, to me, unquestionably, that's the first target, filling that gap at 53.75. You see the retracement numbers. I mean, if we're coming off, the more recent May 31st low, obviously the retracements are higher. They're basically between 53.15 and 53.55. And then if you go back to the April 19 lows, you're talking more between, 5,300 with a downside of around 5,200. Josh been talking about the 20-day. For now, I think it's just a little bit of, maybe back and fill, which is really what we talked about last time we were on here. Just maybe the market got extended a little bit. And, at this point, let's see what the next catalyst is. And, whether that's tomorrow night, I kind of doubt it, but it'll be interesting to see. I did just want to pull up, we don't do this too often, just the weekly charts, both in SPX and NDX. And, over the course of the last year, I thought it was interesting. Both of these indexes have had basically 18 net down weeks. A lot of green, obviously. It's been a hell of a market. But I just wanted to offer that weekly perspective and remind you that it's, we've got this capacity, always a good thing to hit up from time to time, on the platform. Look at those weekly charts to potentially offer you a different perspective. There's the same thing with NDX. So, few more charts. This is just NDX. I mean, from on a daily basis, and coming out of April 19th, we talked about this with the SPX. Your potential 5-wave. You got one here, two down, longest leg 3. Typically, right there, we talked about the 4th leg, and then a 5th leg we talked about fairly recently. We've rolled over from that at this point. It'll be interesting to see whether we continue to just back and fill or, head off to the races again. I don't know if we can do, a weekly call without talking about NVIDIA, but, stock split, as we all know, option volume has exploded. Sometime over the next, couple meetings, I'll get into, expansion of open interest and option volume in NVIDIA. Obviously, it had gotten, way above, although I don't have the 20-day average up, but NVIDIA only a couple times, versus the 20-day, when it gets up 18 to 20 points above that 20-day average, tends to be an area of a pullback, and that's what happened when we got to just over 140 recently. I think it was 19 points above the 20-day. We got a 16% correction. Now that's top to bottom, but top to bottom, we got a 16% correction in NVIDIA in 3 days. And, my guess at this point, this thing is just going to go sideways. It will be interesting, as Josh always points out, whether the target 3 turns out to be support and we go again. Their earnings aren't for quite a while. And so, my sense is this thing is not going to be market leadership going forward. There are going to be other areas, not this. Maybe, we'll see what happens as we get closer to earnings, but that's way off in the future. So, market leadership, I think, is and where it's going to come from is going to be one of the next key questions that we have to try to dissect. When I saw the FedEx, there was FedEx news last night, and here's their chart. Stock's up, I think, 15% today. I did not have a chance to get into the weeds to find out, why their earnings and top line were so much better. But, I went back to the chart and darn, look at this thing on earnings over the last few cycles. And Josh, we had I think a FedEx strangle trade maybe in the earnings.
Yeah, the volatility rise, prior to earnings. So you get out before earnings. So
yeah, we may want to look at some different types of trades there as well, because look at these gaps over the last few cycles, and of course no consistency. Here we are in December, the thing fell out of bed, and then another gap in the last quarter to the upside, and then we got another gap today. So there's homework to be done in terms of what's driving that. But FedEx, better than expected. It's just simple common sense. Maybe the economy's cooking, or maybe I don't know how many of you have sent anything with, via FedEx lately, but it is obscene. Maybe it's nothing more that they've raised prices so much they're making, a boatload of money. I don't know that it's number of shipments, but certainly gap to the upside today, I think gets us all thinking, wow, is that a good sign for the economy? Blah, blah, blah. Earnings generally. We were in state 4, as you see in FedEx, and, next thing was, is FedEx necessarily, or more, I don't know about more importantly, but something like the IYT, a proxy for the market is where I took the FedEx earnings. So I pulled up IYT, which is in 4, nothing necessarily jumps out at me there. This is, but when I look at the longer term chart, quite a bit jumped out at me, and I'm not using IYT as a market proxy. I'll tell you that. Whether it could be new leadership, only time will tell. But IYT, and I think I mentioned this at one point when we were talking about it a little ways back. There are 44 holdings in IYT. Uber is the largest at 19%. Union Pacific is the second largest at 17%. UPS is third at 9%, and FedEx is the fourth largest component of the 44 at 4.7%. So, it's in there, but, the majority are, there are a lot of small companies, and, it's certainly, from my perspective, at a quick look, not a proxy for the market. There's certain things, that matched up. It topped out back in November of 20, early 22. You did get a really significant bump. I think the market did have a little bit of a rally back there in March of 22, which was a fake rally. And then, we got a big sell-off. It did bottom with the rest of the market in October of 22, and then kind of sideways, and another good rally, into last July, which was, pretty major top, as we recall, going into the October lows. It was late, actually, no, it was pretty much on time in July, in October as a low, and then rallied pretty good. The reason I'm not using it as a proxy now, there are some consistencies there with the overall market and this thing. But it has certainly underperformed at this point. And so, where the markets have, made some new highs, this thing is lagging. So I guess my point here is, could it be new leadership? Time will tell. I kind of doubt it. But the whole idea of FedEx having better numbers, got me thinking in those terms. So you may have different thoughts. Please share them. Might be a catalyst to do a little homework. But, that was just coming out of these FedEx results. And then FedEx pays a pretty good dividend. I think they pay like 2%. So, we don't really ever pull up these pages, but it's interesting. It's a mixed bag in terms of the analysts, and I guess you could see that a little bit given, the extreme reactions to earnings over the last 4 quarters. So there are always lots and lots of things to check out on the platform. That's what I wanted to review today. Happy to talk to anybody about any thoughts you may have.
Hey Joe, this is Robert here.
Hey, Robert.
Yeah, on Nvidia's sell-off Monday, any thoughts on whether that might have been profit taking or sector rotation or some rebalancing maybe going on?
I would say all of the above. I mean, just think about it. If you're fortunate enough to long that thing and still long it, I mean, more power to you. I think honestly, I think there was also, and I didn't get to, get the homework done, but I mentioned there's been an enormous increase in option volume. And I'm guessing that a lot of people bought calls in this thing since the split. I mean, and I mean, right here's average daily option volume is 4.3 million. It pre-split, that was about 1.1 million. So I think, basically a lot of upside speculation. And it wouldn't surprise me if that might be the biggest reason why NVIDIA is going to kind of be sideways for a while and not go up, because so many people bought calls in this thing over the last, month or so post-split.
Yeah,
and I will try to, confirm some of those. I will confirm some of those numbers and the increase in open interest in the various strikes in follow-up meetings. But generally speaking, I think that might be the reason, if or at least towards the top of the list.
Yeah, I was kind of looking back at the history of stock splits. I never really followed stock splits, but it looks like a lot of times from the all-time high, you have a big reversal candle and that red one, and then it'll go back up again, maybe make a new high, and then it really drops off significantly.
Okay, well, I go back, I think this was March 8th. It's a date that we've talked about a lot over the last few months. You had a monster, bearish engulfing candle there, and that basically, took us into the April 19 lows for the market. And so it has, been obviously the market's been NVIDIA, to a large extent, but it will be very interesting to see whether, as you say, you're thinking maybe we're going to get, a far more significant pullback in this thing. Is that what you're saying?
Well, just like I say, and when you look at stock splits in general and you look at the chart, there seems to be a pattern that then there's a big sell-off.
Well, I'll be surprised, honestly, if we get a big sell-off in NVIDIA. But I've been surprised before. Dave, were you going to say something?
Yeah, I was going to make a couple of comments on a couple of different ideas that were in the same paragraph there. One was on the rebalancing kind of thing. I believe the rebalancing actually was supposed to support NVIDIA but harm Apple. And I'm not sure it turned out that way. And the last time they announced the rebalancing, I actually played that in terms of trying to play to the downside, the people that I thought would get hurt didn't make out so well on that trade either. So I'm not sure that the rebalancing happens just exactly when they say it happens or how it happens. But I'm not sure that was the key thing for NVIDIA to be down. Now on the stock splits, it's like, well, why do they split stocks? But it doesn't change the fundamentals much, does it? It does change a couple things though. It enables people that couldn't buy in at $1,000 a share to buy in at $100 a share. And if you're a retail investor that just has been out of the NVIDIA trade because you just couldn't afford like 1 or 2 shares with all of your money, you can now buy maybe a share and buy and hold it and buy and hold it. So I tend to agree with Joe and the fact that I doubt that NVIDIA is going to go down much due to the people that just bought their first shares ever of NVIDIA. Now, for stock splits, the other thing the stock split does is it if there's a 10-for-1 split, the next day there's 10 times the amount of shares in the market, or is there not? So wouldn't volatility necessarily be pretty much muted just after the split compared to what it was going into the split? I'm kind of thinking it should, but again, I don't have facts and details to back that up. It's just seems what I think the logistics should be. So the stock splits, and now you're back to your question that you asked sort of a little while ago as well. Where's the market leadership going to be in the next couple of quarters? Well, that's kind of a good one, if you ask me. Look at Apple, look at NVIDIA, look at the leaders of the past, and you'll see they have some pretty big ups and downs. And those might be interesting option plays either way when you're looking at them. I tend to look at maybe playing Apple to the downside here after it just had a range of their annual, rah-rah meetings and, product updates and all that. There's some IFCOM now on AI that we'll have to wait and see. But look what the stock did on all of that kind of IFCOM information. It went way up. So did it go up too much? Is it maybe a chance to play to the downside? Maybe, maybe not. Maybe it's all good news. It's impending and will happen just the way it's been advertised. But we'll see. So that's my question too: is where's leadership going to be like in quarters 3 and 4? And just to note that I think Micron's quarterly is the last of the quarter, which is like the first of the quarter, next quarter that I look at for semiconductors. So that's coming out tonight. So maybe I'll have a different opinion next Wednesday when we know whatever the results are for tonight. I think it should be an interesting feedback on AI and what Micron announces.
And they are tonight, right, Dave?
I think they're tonight.
Yeah, I think that's right. I think I saw that somewhere. So let me actually, in advance of that, let me pull up, the micro. There's the Apple chart, by the way. I mean, I think we had that not too long. You got, little back and fill would be healthy, but chance, in that lead, we will, hard to think that that's going to lead the market at this point, given the run it's had. But here's MU just to take a peek at it before the earnings. Okay, so you can see this thing has been in a monster run, well beyond its average days, and the current move is. I hope you were long it, Dave. What a run. So. And where's 109 is target 3. That's wouldn't think it's getting there anytime soon. So but back to the leadership, we'll have to do some homework. You can see more and more of these state ones are appearing in the sectors. So we're not going to have the call next week, but we could get into that on the 10th. Looking at leadership, I know I used to go through them pretty seriously each week, and then I just thought it would be better to move away from that. But we'll get into that on the 10th and look at different potential leaders there. So, anybody else? One thing I will add: NVIDIA. I just ran some retracement number. I think that chart's gone now, but retracement numbers, and it below the other day was 118 and change. If you come off the $76 low, let me hit it up. You got basically to a 3/8 retracement coming off of the recent low. Let me see. We coming off of the $76 low. We essentially have already done 3/8 retracement coming off of that low, within a point or two. If we're going to get another leg down, it would be 108. Okay, so just as a couple different potential areas, and then basically 100 would be a 5/8 retracement, which you can see there's natural support there. There's a gap to fill. Whether we're getting there, time will tell. But just a few more numbers. I think that's it, Josh. Unless anybody else has anything. Again, enjoy the debate tomorrow if you watch it.
Okay, yeah, we're at our typical hour.
Yep.
So just thanks, Joe. Any last questions or comments before we wrap it up?
Hi, Josh. This is Robert again.
Yep.
Yeah, just the tech sector in general. I've heard a couple comments by a couple of people that that the companies that have invested in AI aren't seeing the returns, and they're wondering what's going to happen when they don't think Wall Street has figured that out yet.
Yeah. Well, I mean, what do we see like on the consumer end as far as AI right now? Like chat help, really, right? I mean, you log into a website and they have like automated chat bots and chat GPT and I'm sure there's a bunch of stuff on the horizon, but that's all I see right now is a bunch of chat bots, right? So I don't know how, it may be helping lessen customer service type people, but I just don't see it yet. So I don't know. I mean, but there's big spending on it, so I don't know. That's my guess. Anyone else have thoughts
Yeah,
on that?
this is Dave. I'd go back to Robert and say this is like, okay, all those that are touting AI, who are they? They're all the big cloud companies anyway, right? So they all have big server farms. And if they get the best hardware to improve their speed of their servers, or they're going to benefit. Well, is that AI or is that just faster computers with more memory? That's where I have a hard time finding companies that break out their AI investment to their AI returns on their AI investment. You don't usually say that. So, all these big companies are doing, it makes sense for their marketing departments to tout AI, even if it isn't a thing. Because if their bottom line improves because of some other things that aren't AI, it will mask whatever the AI hype was that they told in the past. In my humble opinion, I think that's why everybody with a software development group is hyping AI, because they all have programmers that can create software, which is what AI is. Anyway, that's what I think about AI. And like I say, I think if Micron does not have a good quarter after all of the GPUs that NVIDIA has been selling that require a whole bunch more of memory, I'll be surprised. So unless there's more hype than real AI to that whole scenario, which could be true.
Well, they're definitely buying NVIDIA stuff, so
They definitely are. They definitely are. And it does require a lot more memory. So where are they getting the memory from? There's only Micron, SK INX, or that South Korea company, and Samsung. So those are the big memory makers. There's not that many.
All right. Good points. Okay. Yeah. Thanks, Robert. Thanks, Dave. Hope that answered it for you, Robert. Anyone else? Okay, we'll wrap it up. No meeting next week and reconvene the 10th. So happy 4th, everyone. So thank you.
Happy 4th. Good meeting. Thank you.
Thanks.